Hi, everybody, and welcome to our quarterly AFC Fund webinar. My name is Thomas Hooker, and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who is managing with me the AFC Asia Frontier Fund. Ahmed Tabaqchali, the chief strategist of the AFC Iraq Fund, is today in Baghdad, Iraq. Scott Osheroff, the chief investment officer of the AFC Uzbekistan Fund, is in Tashkent, Uzbekistan. And Vicente Nguyen, the chief investment officer of the AFC Vietnam Fund, joins us tonight from Ho Chi Minh City. This webinar will last about 45 minutes, and thereafter you will have the opportunity to ask questions during our 30 minutes Q&A session after the presentations. You can submit your questions online through the Q&A icon at the bottom of the Zoom window on your laptop, PC, or mobile phone. By the way, Zoom just introduced a new feature. When you press at the bottom of the Zoom screen, the bottom show captions, it shows the image CC2 as well. You can watch the live transcript of our speakers. Again, press show captions on the bottom of the Zoom screen, right in the middle. Exactly today in a week, the US elections will be held, but obviously we have absolutely no idea who is going to win. And besides that, we expect it will take some time until we know who will be the successor of Joe Biden. Ruchir will provide you with a short analysis of the export exposure, and particular the country's exports to the US in a few seconds. Ruchir, over to you for the economic overview and the AFC Asia Frontier Fund specific update.
Thank you, Thomas, and welcome everyone to our regular quarterly webinar. Good to have you on. So I'll just kick off very quickly. So I'll talk about the Frontier Fund, what's driven performance, some of our top picks, as Thomas mentioned, with respect to possible impact on some of our markets if Donald Trump does become US president, potentially, and also the outlook for our markets for 2025. So very quickly, I mean, as this chart shows you, I think everyone who's a regular readers of our newsletters and also webinars has possibly seen for the last probably 6-7 quarters now, Asian frontier markets have been performing very well. So 2024 is a very strong year so far for many of our markets, and it's a continuation from 2023. So it's not just a 2024 story. It's been a story for the last probably 18 to 20 months. And performance has been driven predominantly by, in general, across the universe, by Pakistan and Sri Lanka. They have been our top two performing markets for the year so far, and that's not a surprise actually. So at the end of 2023, in our review and outlook report, basically we wrote that South Asian frontier markets can outperform in 2024 because they're coming out of a crisis. Earnings are improving. Valuations are very attractive. Interest rates are coming off. Of course, Bangladesh hasn't performed. I'll come to that later. But Pakistan and Sri Lanka have completely outperformed. And Pakistan probably has performed much better than my expectations when the year began in 2024. And of course, besides that, also Iraq has done very well. Mongolia has done very well. The Frontier Fund as of now is up about 13.5%. As of now, the fund is up for it's going to be another. So far, as of now, it's another positive month for the AFC Asia Frontier Fund, up about 2% for the month so far. So about 13 to 13.5% so far for the year. So pretty strong performance continuing for the year so far. And also Vietnam has done okay, and Bangladesh, as I mentioned, is the worst performing market in our universe, but that's an outlier so far this year. And for the fund, the performance has been very broad based. It's a continuation of the last few quarters. Returns have been driven by Pakistan, Mongolia, Vietnam, Sri Lanka, Kazakhstan, and Iraq, and the negative contributors have been Uzbekistan and Bangladesh. So the positive contributors are significantly higher than negative contributors. And just coming back to outlook for this year, which we wrote at the end of last year, I think there were 3 important factors which would drive returns for our markets in 2024, which we wrote in December 2023. One is continuation of monetary policy easing, not just in our markets, but the start of monetary policy easing on a global basis. So yes, you've seen interest rate cuts from Sri Lanka, from Kazakhstan, from Pakistan, from Georgia, etc. this year, but you've also seen the start of interest rate cuts from the US Fed, from the ECB, from the Bank of England, and also from many Asian central banks like Philippines, Indonesia, and Thailand. So that is what we were expecting, and that's been very positive in general for frontier and emerging markets. And second was the earnings and macroeconomic recovery taking place in our markets like Sri Lanka and Pakistan and Vietnam also to some extent. That's played out. And also you had attractive valuations going into 2024. That's been very helpful for the re-rating or the rally in our markets, and valuation is still very attractive. So I'll talk a bit more about that. So basically, what we expected to happen in 2024 has pretty much played out, and that's been a pretty good call, a pretty good call from us, and that's really helped our returns for the fund and also in general for our markets this year. And as the next slide shows you, the performance has not just been, I would say, decent for the last probably 12, 24 months. I think over the last 5 years, the AFC Asia Fund has done pretty well, I think, compared to many of the benchmarks you see on this chart, like the Frontier Market Index or the Emerging Market Index or the ASEAN Index. And this is despite so many headwinds that global markets have faced: the pandemic, war in Ukraine, conflict in the Middle East, high interest rates, high commodity prices, geopolitical tensions, etc. So still a pretty decent performance. So it just shows that Asian frontier markets are delivering returns despite the issues many of these countries have faced. And that's not just because of macroeconomic situation improving, but also because of stock selection. Our bottom of stock selection has been very strong across the board. That's very helpful. And it also shows that there are some very well-run companies and very good companies operating in our markets like Bangladesh, Pakistan, Sri Lanka, Vietnam, Kazakhstan, which are doing very well and trading at attractive valuations and very strong fundamentals. So that's one very important reason why returns have been good over the last few years, despite the issues the global economy has faced. As the next slide shows you, so as I was mentioning, the interest rate cycle has turned globally and also in our markets. So yes, I mean, the chart on the top left, basically illustrates start of interest rate easing in many of the global economies like the US, ECB, Philippines, Bank of England, Indonesia, Thailand, etc. Obviously, many of these banks or central banks were waiting for the US Fed or waiting for cues from the US Fed with respect to when they'll start cutting interest rates. So it was quite certain they'll begin cutting interest rates in September 2024. That happened. Then you saw, interest rate cuts, in thereabouts in that same time frame by Philippines, Indonesia, Thailand, and some of the other central banks. Of course, ECB cut well before the US Fed, or a couple of months before the US Fed. But though that happened, the last, two odd months, many of our, as the chart on the top right shows you, many of our central banks, many of the central banks in our universe began the easing cycle well before the US Fed. So they weren't waiting for the Fed to cut interest rates. They weren't waiting for every Fed meeting and every Fed commentary, etc. So they began cutting interest rates maybe from May 2023 onwards. I think Georgia was the first central bank to cut interest rates. So it was in May 2023, and then Sri Lanka began cutting in June 2023, followed by Kazakhstan, Mongolia, and then Pakistan. I think the reason why they began cutting well before developed central banks is because they also raised interest rates very, very aggressively in 2022. In the midst of the crisis that they face, with respect to because of the war in Ukraine, high commodity prices, high oil prices, the very aggressive US Fed. So they had to, for example, the US Fed raised by 5.25 percentage points, Sri Lanka raised by I think 10 percentage points, and Pakistan even more, I think 12 or 13 percentage points in a span of 12 to 18 months. So given the fact that the macroeconomic situation is stabilizing, inflation is falling off pretty significantly, many of these economies, they've got room now to cut interest rates, though they're still high in some countries like Pakistan. They've had a lot of room to begin cutting interest rates in the past probably 12 to 15 months. And in my view, out of these countries, the space to cut interest rates even further and significantly is there in Pakistan, which I'll come to later. So the point I'm trying to make is that the interest rate easing cycle, which we've been mentioning actually for the past probably 12, 15 months in our newsletters, that this will be very helpful for our markets, has played out. That's really helped many of our markets like Sri Lanka, Pakistan, Mongolia. All these countries are, top performing stock markets for us, and also the stocks we hold in these markets are doing very well. So that's the key point that I'm trying to make over here. And as the next slide shows you, strong, as I was mentioning, Pakistan cutting interest rates even further. So they began cutting interest rates only in June of this year, just a couple of months ago. Started off a bit slowly, but now they've got more aggressive. They cut interest rates by 450 basis points since June 2024. But inflation is falling, I would say, much faster than anticipated. It's now at 6.9%. I think the inflation for October should be out in a few days. That'll be about 6%. So you have a benchmark interest rate of 17.5%, inflation at about 6%. So in my view, they have room. By the end of this year, they'll cut interest rates by at least another 400 basis points, if not more. And that's going to be very positive for the stock market. Historically, the stock market in Pakistan is very sensitive to interest rates because interest rates, go up and down very aggressively. And you've seen the stock market rally in Pakistan because, of course, the IMF program, macro stability, etc., has helped a lot. But interest rates being cut so aggressively is one key factor why the stock market in Pakistan has done well. I think it'll continue doing well. I think it'll rally very strongly going into year end. So Yes, it's up 46% so far in dollar terms. I would easily, I mean, in my view, I think it can easily rally another 10-15% more in the next 2 months until the end of the year. So I think Pakistan is one market which can still continue outperforming, I would say, into the first quarter of 2025 or first half of 2025. And as the next chart shows, even Sri Lanka actually has done very well. For a variety of reasons, not just interest rate cuts. They've seen a very strong macroeconomic recovery. Tourism earnings are back very strongly. The tourism arrivals should be back to almost pre-pandemic levels by end of this year. Worker remittances from overseas Sri Lankans has been very strong, close to $6 billion. GDP growth in the first half of this year was about 5%, which is well out of expectations. IMF was expecting, 2.5%. They've done 5%, so very strong recovery. And that's obviously, besides the interest rate cuts, that's also helped, the macroeconomic recovery also helped stock market sentiment. But I think one key concern for investors was the presidential election, which took place just a little more than a month ago, and there were concerns that the candidate who became president was whether what he would do with respect to the IMF program in terms of renegotiation. So if you notice in this chart towards the end, which is September onwards of this year, you've seen the green line, which is the Colombo index, has rallied a bit, but the banks have rallied even much more, and we hold both these banks. So this market was quite weak going into the elections. So between June, July to end of September, the market was down 15%. But since then, the market's rallied by 50. It basically recovered what it lost, and the banks have even rallied even more. Because the new president has made some very positive comments about the IMF program, that he will not, he will renegotiate only within the framework of the program, and the debt restructuring talks are very important for him and for the economy. And he's made some very, good commentary about continuing reforms for the economy. That's very helpful for the world stock market. But the banks even more so because, they've seen a recovery in their own growth. They are seeing low provisioning costs with respect to NPL ratios, etc. So that's very helpful for the banks. That they were trading at 0.5, 0.6 times price to book before the elections. Multiples are re-rating now. They've seen a very strong recovery. So we hold both these banks, and they've done very well for us. In fact, Commercial Bank of Ceylon is our biggest position in Sri Lanka right now, and it's done quite well. And the other one, Hata National Bank, has basically doubled for us since the end of 2022, and I've shown the prices since December 2022 because that was the bottom in Sri Lanka, and we started buying Sri Lanka then. Of course, we added to Sri Lanka also before the election. So we increased a bit to Sri Lanka in the last couple of months. So Pakistan and Sri Lanka, two markets, and positive one going into 2025. As the next slide shows you, and earnings recovery also is continuing into 2025. Many of these economies faced a tough time 2022 and 2023, including Vietnam. And now many of these countries and many companies in these economies are seeing a recovery in earnings from a low base of 22 and 23. So you're going to see double-digit earnings growth, across the board in Pakistan, Sri Lanka, and Vietnam, and you're seeing that in results coming through in the last couple of weeks. And just a word on Bangladesh. Bangladesh also, I'm not mentioned here, but because despite the political crisis that we had a couple of months ago, so far the companies that we hold in Bangladesh, they've declared very good results. You have consumer companies and banks which are showing 15-20% earnings growth despite all these issues. So it just goes to show that whatever you see in the media and whatever noise there is in many of these economies, it may not really be that bad for the fundamentals of companies or for the overall economy. Yes, it's bad from a news-making perspective, but in general, these companies are blue chips and they're very well-known brands, and they still manage to grow earnings despite the economic situation or political situation in these economies. And as the next slide shows you, valuation is still very attractive in our markets despite the strong run for the Frontier Fund or AFC Asia Frontier Fund, and also for many of our markets. So the AFC Asia Frontier Fund trades at about P of 6.6 times. So the real, P multiple expansion hasn't really happened in our markets. It's come via, interest rate cuts, earnings recovery, etc. Earnings have come back pretty strongly in many of our markets. I think the real much further upside can happen if there's a major P multiple expansion, say for example in Pakistan or Sri Lanka or even Vietnam for that matter, or for Central Asian companies. So Pakistan trades at 5 times, but historically it's traded at 7 to 8 times. So it goes back to even 7 times. That's a pretty strong multiple rate. Sri Lanka could go back to 12 times. And in Kazakhstan, though the P ratio on the right on the table on the right shows 11 times, but most of our companies in Kazakhstan, even Georgia, trade at, P of 4 or 5 or 6 times. So, for example, if we have something positive happening in the Russia-Ukraine conflict, because it's all linked to it, the sentiment is very linked to the region. You could see PE multiples expand for many of the Georgian and Kazakh companies listed in London and the US. So still a lot of room to grow still a lot of room for PE multiple expansion in our markets. And that's why I'm positive going into 2025, because interest rates also are coming off. So that's overall quite positive for our markets. So that's a bit on what I think will drive returns for our markets over the next couple of months and also for 2025. And maybe I think I just talk about a couple of slides on the US election from the next slide onwards. So I spoke about this in July as well. It's a similar slides, but since the US election is basically just a week away, I think it'll be good to repeat what we mentioned in the previous webinar as well. So yeah, I mean, as Thomas mentioned, it's going to be a very close election. No one really knows. Well, it's too close to call basically. But if Donald Trump does win the US election, then yes, I mean, there are concerns about countries, especially in Asia, which are very trade dependent, because Donald Trump has made a lot of comments, not just about putting tariffs on Chinese exports, but also, putting tariffs on all exports into the US from all countries. So, for example, as the chart on the top left shows you, these are countries with the high exports as percent of GDP. Obviously, Vietnam stands out because, as we all know, it's very trade dependent and very trade dependent on the US especially. But what stands out here is the South Asian frontier markets, Bangladesh, Pakistan, Sri Lanka. Exports as percent of GDP is extremely low. So, in the event there's a lot of noise, like we saw in 2018 and 19, and there was a trade war between China and the US. I think these countries should be better off, especially given the fact that they're seeing a macroeconomic recovery, and in general seeing a economic improvement, which is not very dependent on exports to US, or in general on exports. So that's why they kind of stand out. Even Central Asian countries, they're not so exposed to exports as a percent of GDP. And as the chart on the top right shows you, exports to US as percent of total exports for these countries, Cambodia is very high because I think they have duty-free benefits to the US, but obviously Vietnam stands out here as well. US is the biggest export market. And again, like I mentioned, Pakistan, Sri Lanka, Bangladesh is still very small exposure. I mean, it's large as a percent of total exports, but exports as a percent of GDP for these countries is still very small. So, in general, on a relative basis, I would say South Asian frontier markets, Central Asia would be relatively better off in case you have a lot of tensions or a lot of noise about trade or trade tensions or trade issues if Donald Trump does become US and if he does take very drastic action. And as the next slide shows you, yeah, just a bit on Vietnam as well. The chart on the top left, it shows you the US's trade deficit with various countries, various important trade partners, and obviously Vietnam. The trade deficit between Vietnam and US is increasing significantly since the trade war began in 2018. And the chart on the top right shows you Vietnam's exports to the US. Basically, they've more than doubled since 2017. So most of Vietnam's export growth has come from exports to the US. So, if one wants to take a more negative view, and if there is concern on this, then one could argue that, Vietnam could face some pressure. But having said that, even last time when Donald Trump was president, he put some pressure on Vietnam and they came to some sort of agreement about Vietnam importing more goods from the US and more Boeing aeroplanes from the US, etc. But having said that, I think Vietnam and US are building very close relations now. So they have a comprehensive strategic partnership. So that's one very important point to note. Two, I think, given US's interest in the region, they want to build, relations with countries like Vietnam. And three, Vietnam by far is the key beneficiary from the global supply chain shift. So despite, pressure from, all this noise about tariffs and trade tensions, I think foreign direct investments into Vietnam have been very strong even this year, about 13 billion so far in the first 9 months of the year. So very strong momentum in foreign direct investments. Possibly that will even continue going forward. So I'm not so concerned about Vietnam. Yes, there'll be concerns in the near term, but if you take a 5-6 year view, Vietnam is by far the beneficiary from this global supply chain shift, and that'll continue. So I think Vietnam stands out from that perspective, and it's a solid long-term economic story. And I'll just talk about our top picks on the next slides. So I spoke about last time as well, but I just thought I'll go, overview again because the stock has rallied even more since July. So it's basically up about 120% this year. This is the largest mobile phone distributor in Pakistan. They distribute for Xiaomi, Samsung, etc. But The bigger picture here, bigger story for this company is they've gone into mobile phone assembly in the last few years, and the biggest mobile phone assembler in Pakistan now. They're assembling smartphones for Xiaomi. They're going to assemble, they've already begun assembling Xiaomi TVs, and they recently won the contract from Acer to assemble laptops and tablets, which they will start pretty soon also. And that is the key for this company, in terms of Pakistan wants to do more domestic assembly, which they're doing now via this company, and possibly they can even start exporting via this company through export benefits. So this could, I mean, that's the reason why a lot of investors are excited about this company. You've seen similar stories play out like this in India and some other markets. So this company will have a top line or revenue of $500 million this year. So it's not a small company. And this could be one of the, this is our top pick, second biggest position in Pakistan, one of our top picks for the fund. And the next stock is also in Pakistan on the next slide. Actually, before that, this is part of our ongoing research, where we go on the ground, meet companies, meet policymakers. Thomas was in Pakistan, in Karachi and Lahore just a couple of weeks ago in beginning of October. And this is him at the Airlink facility / assembly plant in Lahore. And I think this facility, actually, I don't think this facility does the Xiaomi smartphones, and it was a very modern assembly unit. You have everyone doing, it's modern equipment, and it's basically world class processes. So this is why we like the company, and it could do much better going forward as well. And the next stock I'll talk about is also from Pakistan. This is Pakistan Stock Exchange, completely undervalued. I think the market cap is $50 or $60 million. It's peanuts compared to the market cap of other stock exchange in South Asia or in Asia or in the region. It's a direct proxy for the recovery in Pakistan stock market. So, for example, stock has done very well. Plus, they also have equity stakes in the Pakistan Depository and also the Pakistan Clearinghouse, which are also doing very well because the stock market is doing well. Plus, there's a lot of potential. For example, if you look at the bullet points on the left, there are only 321,000 individual trading accounts in Pakistan. So that's basically nothing. So a lot of potential if regulators take the right steps, if they reform and, build stock market education and, build up further awareness about stock market or in general, capital market investments. There's huge room in general for the industry to grow and also for Pakistan Stock Exchange to do much better. And plus, the Pakistan Stock Exchange is sitting on prime real estate in Karachi, which they can develop. So they could also get rental income going forward. So this is a pretty interesting story. Also, stock has done well for us, up about 80% this year. And the last topic we have quite a few topics, but I'm mentioning 3 today. FPT Corp from Vietnam is the largest software outsourcing company in Vietnam. They're doing very well across the board. They're doing well in the US and Europe, but also in Japan and Asia Pacific, where they're doing actually very well. And the order book just crossed $1 billion as of the third quarter of this year. So they have very good visibility over future revenues. And the earnings are consistently growing. The earnings have consistently grown about 15-20% for the last 3 or 4 years. And the outlook also 20% growth over the next 3 years. And this is the largest stock position, not just in Vietnam, but also for the fund. So we're very positive on this company, and we've just done very well for us. So it's completely outperformed the VN index, not just this year, but ever since we're holding it since the end of 2021. So I just probably want to wrap up. Just give an overview on the next slide. Yeah, so I think the last 2 years have been very strong for our fund and also for the Asian frontier markets. But despite that, valuations are very attractive. Fundamentals for the companies are very strong, as this table shows you. But as I mentioned earlier in my comments, I'm still very positive on the outlook for Bangladesh, Pakistan, Sri Lanka, because like I mentioned, they're coming out of a crisis and also exposed to trade tensions. It's more domestic money, which is the stock market, not so much foreign investor money. So I expect Pakistan, Sri Lanka to rally into the first half of 2025. And I think for next year, Bangladesh can be the dark horse. I mean, they've had a tough time. But as I mentioned, the earnings have been still very strong for third quarter for many companies that we hold. I think the economy is bottoming out now. I think it should bottom out by the fourth quarter, by the end of this year. And I think by second quarter of next year, you should start seeing inflation coming off, interest rates start coming off, which is a similar story which we saw in Pakistan and Sri Lanka in 2023 and 24. So I think the same thing plays out in Bangladesh as well. You have attractive valuations, and that could start re-rating strongly in 2025. But broadly speaking, I think the markets, like I said, the markets are doing very well. So will Pakistan do another 50% this year? Sorry, in 2025, maybe not, but I'm still positive that they can do 10-15% in general for the fund, and also for Asian emerging markets can still have double-digit return for next year. Having said that, I think there's still going to be a lot of geopolitical noise next year. I think that's the key risk. Could be US elections, the outcome of US elections, what happens in 2025, and also what happens in the Middle East, i.e. Iran, with respect to what happens to Iran going forward. That could be something which one should watch out for. So, I think the markets could be volatile going into 2025. So idea is to keep your powder dry. If the markets correct based on some geopolitical tension or some concerns about economic growth in the US, I think it's a good time to look to invest. But idea is to be smart about investing now, because I think the markets in general have done very well over the last 2 years. So with that, I will hand over to Ahmed Tabaqchali, who is the chief strategist of our AFC Iraq fund. Over to you, Ahmed. Thank you.
Thank you, Ruchir, and thank you all for taking part. Yes, I think as Ruchir was saying, the geopolitical risk, and there's no such thing as a risk as much as the Iraq story comes in. We are almost the poster child of risk. The question of risk and the headlines, I think the geopolitical, especially the widening Middle East conflict, has been something that has been dominating news headlines, and especially when it comes to the region, but also when it comes to Iraq. However, as we argued here, I think since the onset of the conflict, and continue to argue over the last few months, every time there was a flare-up, we made the same argument, that the two things. One is that the equity market in Iraq, as measured by the Rabi Securities US Index, which is the chart on the top right-hand corner, pretty much shows that the index, in fact, is discounting that almost a nil probability that Iraq would be drawn in a widening conflict should it take place. That's one. By the way, the index is up almost 78% since the onset of the conflict in early October of last year, and that I'm talking as of today's. So that's one. Oil prices continue had in the beginning and continue to argue that the fact the conflict would be contained. The reason why I always use here on the bottom left-hand corner, I use two bands that pretty much define the range that oil prices have been in the last couple of years. First would be the gray line at the bottom of the screen, at the bottom of the chart, which is the expectations for future oil prices as we finished with the COVID at the end of 21, while the red line marked the expectations as soon as the onset of conflict of the Ukraine invasion. And we've always argued that, in fact, as long as oil prices are between those two levels, it's pretty much almost a Goldilocks scenario for Iraq. And for the last few months, at the beginning of the conflict, they were near the top, but they pretty much settled at where they are. The current prices here, I'm showing the expectations, are as of yesterday, reflecting after the muted response from Iran, that all markets were expecting no disruption to supply. So even then, as when expectations were deflated, when people are worried about supply-demand fundamentals, the outlook is still within the rosy scenario for Iraq, as we've argued for many months. Crucially, Peter, if I can have the next slide. Crucially, I wanted to show you, in a sense, for most of you who, the images of Iraq have always been those that you see mostly in the media, and mostly are old, dating back from the days of the invasion, the civil war, and as well as the ISIS conflict. As we've argued over the last, I think since 2019 onwards, is that the economy is transforming. The end of conflict, which is the whole thesis that the Iraq Fund was built upon, in that as the country moves away from war and conflict towards rebuilding, given its enormous resources, given its enormous population, given its that you would see a transformation. And I wanted to show here, by the way, two scenes. One is the evening in which the Israeli attack on Iran took place. And just wanted to show you sort of how evening was in Baghdad. So the first image on the left-hand corner was of one of the city's newest restaurants. It's a restaurant, and on the top side you'll see it has a beautiful sushi bar. I went in there relatively early before the whole evening begins, because evening in Baghdad really begins after 8:39. That's when people go out for dinner. And in a way, the images show you. So I went in there. I went in a stroll in the neighborhood. I walked to a place called Jaduriya and took photos of one of Baghdad's icon, a very famous burger joint called Ali Al-Lami. And you can see people sort of like there there. And in the end, went for dinner at a place called Top Organics, which is a brand new organics restaurant. As you can see, the images shows you about that the local dynamics were driving the economy more than anything else. Not that we're not affected by the conflict, we're definitely affected by the conflict. But as far as Iraq is concerned, this conflict is pretty much similar to what we've been, not what we've been to. We've had different conflict, obviously, but the country's been in a state of conflict for the last 4.5 decades or thereabouts. And so, in a sense, the life is coming back, and that's dominating all activities. And by the way, these scenes have been the same scenes that I've been witnessing ever since I've moved almost on a semi-permanent basis, or spent most of my time in Iraq since late 2017, early 2018. Next slide, Peter, please. And the next one was pretty much the morning following the attack. So, one is the evening and one the morning, and again, showing you that life is really very, very normal in Iraq. Went early in the morning to an art exhibition, and that's the picture on the left and the top. The middle, I went back to 360 because it was a brand new restaurant and I wanted to see what it looked like at daytime. Had lunch there, and then in the evening went out walking about in Mansour. And you can see the thing which I'd like to draw your attention to, you probably may not see very clearly, but you'll see in the picture here, the bottom picture, in the middle of it, you'll see sort of cranes and new construction taking place. And this is something that is now becoming almost a constant feature of Baghdad. Wherever you go, you see high-rises being built, either a compound of high-rises or every street I've been to, almost every street, you'll see either a building being demolished and being rebuilt, and you go in 2 or 3 months later and you see quite advances. It sort of reminds me, obviously different scale, different countries, different everything, how Dubai was in between, let's say, 2004, 2007 and 8. The difference being between those days, Dubai and Baghdad, obviously different cities, different outlook. I'm not making sort of comparisons, exactly, but Dubai is probably a city which has 1 million people, while Baghdad is a city of almost 9 million people that have had no real development as such throughout the years of conflict until the last 3 or 4 years. And this is one thing that will continue to be a constant theme. I think as hopefully news coverage of Iraq becomes more rational and more reasonable, you'll see more and more images of a city that looks pretty much like every other city, but it's beginning to see the financial and the overall development that have been everywhere else. Next slide, Peter, please. The last 2 slides I would go to basically is underlying all of that are extremely strong fundamentals of the economy, as we've argued again over the last few months. The earnings here are earnings. I'm sort of basically using earnings sort of like quarter to quarter, as well as 12 months, trailing 12 months, trailing 12 months, to give you a picture of how the images are. Some of the companies have started reporting third quarter earnings, and they are at the lower part. And it shows that the growth has continued the same manner, if not stronger than third quarter. In fact, one of the companies reported after I prepared that report yesterday, reported a couple of hours ago, and it showed again a very, very strong earnings growth. And what are driving these earnings growth are basically the 3 elements that I've been harping on over the last 2, 3, maybe even longer. And that's basically the relative stability the country has enjoyed, which enables businesses and individuals to plan capital spending because you have greater predictability. So on a scale that we've not seen since the early 80s, that was one. Secondly, the relatively higher oil prices enabled the government to pursue extremely expansionary policies, which resulted in massive liquidity injections into the economy. And finally, another area that we've been talking about the last 1.5 years, at least, if not longer, has been the fundamental changes that are driving or accelerating the adoption of banking, and with it, the transformation of the economy. The 3 of them have provided the wherewithal that sort of, on the one hand, I was showing you the pictures of how life is in Baghdad, and you can see it's almost a relative boom, but here you'll see that boom reflected in company earnings, and it's likely to continue, at least for the foreseeable future. Last slide, Peter, please. And I think I've almost used up my 8 minutes. Now, so what I'd like to leave you with basically is that to argue again that in spite of everything that I've shown you so far, Iraq is in the early stages of a significant economic transformation. Yes, it's been ongoing for a year and a half, The market has only began to reflect that in the last, let's say, 18 months or thereabout. But these kind of changes that undergo a massive transformation are multi-year in the making. And I think Iraq is in the early stages. At some stage, I believe earnings growth would sometimes slow down, but slow down from a higher base, and then you'll see sustained earnings of, it's difficult to tell, but at least 20% plus for a number of years. Now, do I believe that the fund is still attractive? Yes. I mean, unfortunately, this is numbers as of yesterday. If I include today's numbers, the index is up 15.4% as of the end of this morning's trading in Baghdad, and up something like 35% year to date. The fund, on the other hand, is up 12% for the month, or estimate to be up 12% for the month, and estimate to be up 37% for the month. Interestingly, by the way, today's close puts us within a whisker, under 1% lower than the all-time high that the index was at in end of January 2014. It just sort of is the same argument we've been arguing for some time, that the index would recover and rally further from there. So this pretty much reached the first milestone that we expected, basically, that the index would reach the high and then rally stronger based on the fundamentals that we discussed then. However, having said all of that, risks are a factor of investing, but especially for a country like Iraq. We have a long history of conflict. We have exposure to volatile oil prices, as you're all aware. And finally, the conflict so far, this is the second time that have been direct hit between the two main, let's say, antagonists in the conflict. And so far, it's been contained. It's been mostly, mostly contained attack. But who knows what will happen in the future? We believe that markets tell us that it'll be a contained conflict, but a lot of things could happen between now and 5th of November and then year end. With that, I thank you all for taking part, and I passed on to my colleague Scott, who looks after our Uzbekistan fund. Thank you.
Thank you, Ahmed. Good day, everyone. So next slide, please. In previous webinars and also in the newsletter, talk a lot about the market infrastructure that's being built out. I'll get to that in a second, because as I've mentioned before, there's a significant dislocation between what's happening in the equity market versus what's happening in the real economy. So a bit of macro real quick. In 9 months, 24, GDP growth was 6.6%, and the World Bank thereafter increased its 2025 GDP forecast to 6%. So the economy is doing very well, even though there's some struggles with consumer lending and whatnot. The consumer is a bit over leveraged after 5-6 years of a significant boom in credit expansion, but nonetheless, the economy is doing well. And further, the Uzbek government expects GDP to reach 200 billion by 2030. Last year, GDP was 100 billion. It was revised up 12% to account for the black market economy, which is roughly $10.8–11 billion. That might sound like a lot, but if you look back to when we first came into the country in 2018, the black market economy was estimated at roughly 100% of GDP, and then slowly got down to 60, 50, 40. So the government has done a great job of streamlining tax legislation, simplifying tax procedures, and also encouraging people to move into the formal economy, which also helps to stem the outflow of FX and help the country from a fiscal standpoint. So on that note, is the government has simplified tax procedures. Individuals registered as of this year is self-employed, or up 87% versus 2023. And now you've got about 4 million people that are registered as self-employed, mainly in services. So the government has done a very good job of bringing the informal sector into the formal economy, which better shows reflection via the numbers that the government reports. Next slide, please. So on to the capital markets. As I mentioned, there's a big dislocation. We all know this. I've been writing about it for 1.5 years, 2 years, is the government is in the process of putting the pieces together in terms of the market infrastructure to make it easier for business to be done, from foreigners, locals, companies to announce issues, and then, of course, to increase liquidity and create a functional alternative to companies that need to raise money and would prefer not to be borrowing at 25–30% from the banks. So first thing on state-owned enterprises, the government has announced privatizations in fits and starts 3 or 4 times since we entered the country. So, of course, this is subject to change, what I'm about to say, but probably more along the lines of what companies are included in this package. So in August, the government announced the formation of a national investment holding company, basically, which is going to hold 18 state-owned enterprises, and a portion of that company is planned to be listed on the stock exchange, and then potentially in due course abroad. Franklin Templeton is the most likely group to be given the rights to manage this vehicle. They did something very similar in Romania last decade, and it was quite successful. So I look at this as a way for the government to say we're privatizing some of these companies, but more so, it's a way for the government to get some independent members on the board and to clean up the books of these companies, many of which are losing money. Some of them are great, some of them are not so great, but it's a way for the government to clean up the act of the SOEs. And this actually goes in line with the government's announcement for an employee stock option program for state-owned enterprises. So again, the government's been very focused on this. It's taken much longer than expected, but we're finally starting to see the pieces of the puzzle come together. So word in Tashkent is that there will be more news on this by the end of the year. Again, likely that Franklin Templeton is announced as being the group that's going to manage this, the restructuring of it, and then in due course, the listing of it on the Tashkent Stock Exchange. Unfortunately, though, again, as I said, the government is very fickle with what companies it's privatizing. The two cash cows of the country, Agemka, which is slated to be the world's third largest copper mine in the world later this decade, and then Ngemka, which is the gold miner. It's one of the 5 biggest gold miners in the world. They were supposed to be privatized, initially discussed through this vehicle, not anymore. So I guess based on what I've heard, let's see how the market progresses with this and other issues via liquidity and whatnot. And perhaps in due course, we do see them privatized. But equally, they have so much work to do to get everything squared away in terms of transparency, operational procedures, etc., accounting and whatnot. It wouldn't really make sense for them to list today, even though the government in the past has announced that they wanted to list them in sort of a rush fashion. You speak with people that are involved in the potential for these companies to be privatized, and you realize they're not ready. So it seems that the government is taking a more cautious approach, knowing that they'd rather do it right the first time. Next slide, please. So as I've discussed before, there's this sandbox legislation, which is basically a carve out of legislation. So we don't need to wait for this big piece of capital markets legislation, which has been sitting in Parliament for 2 years to get passed. This is a way to expedite the process. And in due course, presumably that legislation does get passed, hopefully in bits and pieces rather than comprehensive, since it includes a lot of things such as securitization of mortgages, et cetera, that don't really need to be focused on right now, REITs and whatnot. So the sandbox legislation was announced September of last year and is moving forward. First, we got Bank of Georgia to be the first custodian bank registered in the sandbox. And then in September, we got Hungary's OTP Bank to be registered as well. And OTP owns a local company or local bank in Uzbekistan. It used to be the state-owned Ipoteka or mortgage bank, which got privatized. So they have a local presence. So that's great that you've got 2 custodian banks and you have options. And this is really important for foreign investors. As I mentioned, the ESOP program for state-owned enterprises is being discussed, and we should see more legislation on that over the coming months. And then, again, further pieces to the puzzle, Uzbekistan being Uzbekistan, or I guess frontier markets being frontier markets. Things can be announced, but always take longer than expected. So we were told that Clearstream, there should be a connection to Clearstream in the Tashkent Stock Exchange later this year. If it happens in the next 6 months, we'd be very happy. Equally, Bloomberg is supposed to start hosting equity prices this year. If it happens in the next 6 months, we'll be very happy. And following that, we're supposed to see the ability for foreigners to be able to trade via Bloomberg on the Tashkent Stock Exchange. And then also later this year, we should see legislation finalized on the issuance of US dollar denominated corporate bonds. And that's a big one for locals because you can be saving in 22, 23% in a term deposit at the bank. But realistically, if you ask anyone in the majority of the developing world where they'd rather store their wealth, in their local currency or in dollars, they'd say dollars. So the ability for local entities to be able to issue US dollar denominated paper in the low double digits would be great for investors and great for the companies that have an alternative to borrowing in Sum at a very high rate. Then further, last month, the government announced they were selling down 4.4% of the Uzbek Commodities Exchange, which is one of our biggest holdings. They were supposed to close the book this week, I believe, but they've extended it into November. And that's because, one, it looks like it will be well oversubscribed. And also, there are so many locals participating. Locals have preference in the privatization or the sell down of the stake, and then foreigners can take up the balance. So many locals are participating that basically brokers are overwhelmed with the account opening procedures. Even though it's digital now for locals, it's still requiring so much time and paperwork that they've decided to extend it what looks like a week and a half, which is great news. And further, courtesy of the sandbox legislation and the piping that is finally being put into place, which is long overdue, we're aware of a few new foreign funds with significant size to the tune of several $100 million that are looking to participate in the sell down of the Uzbek Commodity Exchange and then a few other companies. So again, things are moving in the right direction. Finally, we're starting to see some movement, and it'll be very exciting to see what the announcement is after the book closes for the sell down of the commodity exchange, and just how oversubscribed it was and what was the average price, if you will, being that it's a Dutch auction. So with that, I'll pass it on to the CIO of our Vietnam fund, Vicente Nguyen.
Thank you very much, Scott. Let's go to the next. Hello, everybody. As you know, the Vietnamese economy has a very amazing economic growth in the third quarter. According to the GSO, the General Statistics Office of Vietnam, the GDP growth in the third quarter hit 7.4%. Yes, 7.4% is very high level. And it's bringing the 9-month GDP growth in 2024 to 6.8%. Actually, this level, 6.8%, already beat on the expect and the forecast of most of international institutions, or even the year target of Vietnamese government. Because at the beginning of the year, most of the institutions forecast that Vietnam GDP growth will be around 6% only. And the target of Vietnamese government also is around 6 to 6.5%. However, because of the strong recovery of the industrial production, FDI and exports, it's really helped the country to have an amazing growth. So if you look at this chart, you can see that the economy grew at almost on the aspect of the economy. So the industrial park increased 8.3% compared to 1.7%. It's completely higher than last year. And the FDI also increased 8.9%. And you know that the FDI disbursement in the first 9 months of 2024 hit the record high of the history with nearly $18 billion. And the exports, last year exports has a really bad negative performance with minus 8% in the first 9 months. But since then, the export revenue grew up aggressively. And in the first 9 months of this year is up 15%. And another thing, we have to figure out that the revenue, the export revenue in the first 9 months in 2024 also hit a record high in the history with 300 billion yen, nearly 300 billion US dollar in the first 9 months. This is the new, the all-time high of Vietnam economy. And regarding to the consumption continued to grow, very stable with 8.8% in the first 9 months. And with this very beautiful performance, the government already raised up the targets from 6 to 6.5% this year, up to 6.5 to 7.7% in 2024. And they also set the target for 2025 at 7 to 7.5%. This is really ambitious targets for Vietnam and a communist country, because normally they will set a quite conservative target and try to beat the target. But this year they really set a really high targets for next year. So we can say that they are very confident with the target. So go to the next, please, Peter. And this is the forecast of S&P Global Market Intelligence. So they base on the fundamental factor and give out the long-term forecast that Vietnam and India will lead the annual GDP growth in the next decade, with Vietnam in the first level with 6.2% in the next 10 years. So even though this is quite long-term forecast, and there are of course a lot of uncertainties, however, it's also so they are really confident, and optimisms about Vietnamese economy. And we also see that Vietnam has a really strong fundamental to grow in the next decades. Go to the next, please. We come back to the year target should be grow in 2025. Why the government is really confident to set this high level? Because the stability of the political situation in Vietnam already settled down. So finally, we have the general secretary, and the new president just elected in this month, in 21st October. So on the internal conflict, on the internal fight inside the Politburo of Vietnam already done. And right now they look together forward in one direction. The reason why they will push up a lot of things, and one of those factor, or one of those aspects, is the public investment. So according to the government plan, they will speed up the public investment in 2025 up to nearly 800 trillion dong, is roughly $35, 7% of GDP. So this is really high level, and this amount will push the economy up. The reason why the government is quite confident and optimistic to set a year target in 2025 at 7 to 7.5%. Go to the next, please. And now I would like to give you some update about the stock market. So the stock, the non-pre-funding circular already approved by the Ministry of Finance, and it will go live on 2nd November. And after this circular is approved, and I think that the FTSE might upgrade the Vietnamese stock market to EM probably in March 2025. And as we already mentioned in many previous reports and previous webinars, that if FTSE upgrades Vietnamese stock market to EM, so we will expect around 6 to 7 billion every single year from passive and active inflow into the market. And according to the earning growth in the third quarter in the stock market, the total earning growth estimated around 18 to 20%, even though only around 30% of the listed company just launched their result. But it seems the earning growth is quite beautiful. So at the moment, the market is correcting a little bit after its increase last month. So the index is trading a little bit above the M8 200 level. So this is very strong support at around 1250. And I think it's a good opportunity to buy for myself. I also invested my own money in October into the fund. So I think this is a very good point to buy. So thank you very much for listening.
Thanks everybody for your, as always, interesting and insightful presentation. We will now answer some of the many questions we have already received from the participants, but you can still submit more questions during this Q&A session through the Q&A button at the bottom of the Zoom screen. The first question is for Ruchir. Where is my Zoom? Okay. Do you think Pakistan will keep its positive momentum? The PE is a bit low due to weak currency, but it is stable now. Okay.
Yeah, I mean, the P is a bit low, not just because of currency, but many other factors, but that's a longer discussion. But anyway, coming to the question, I think momentum definitely continues in Pakistan. As I mentioned, the interest rate cycle now has turned for the better. And the central bank has cut interest rates by 450 basis points in June. I expect another 400 basis points by end of this year, and possibly the interest rate will be cut even in the first quarter of next year. So, as I mentioned, the stock exchange in Pakistan or the index in Pakistan is very sensitive to the interest rate cuts, and I expect the momentum to continue because of the interest rate cuts and also because of the earnings recovery. So I think another 10-15% here from the index is, I think, pretty easy to achieve.
Okay, thank you. Then next question for Ruchir again. He has to go for another call. One of our portfolio holding has important call in a few minutes. What is your outlook on the currencies in Sri Lanka, Pakistan, and Bangladesh?
Yeah, Sri Lanka positive because as I mentioned in my initial comments, they're seeing a recovery in tourism arrival, tourism earnings plus remittances in general. There's a lot of liquidity in the economy. So in fact, Sri Lanka has been one of the best performing currencies this year. I think it's appreciated 10%, the Sri Lankan rupee this year. Pakistan also positive. IMF money is coming in, remittances are back, exports are growing. So positive for Sri Lanka and Pakistan currencies. And Bangladesh, I would say sideways for now. They've devalued the currency by about 7% a few months ago, but maybe a little more weakness, but not significant. But I would say sideways. So positive on Sri Lanka, Bangladesh, and I would say maybe some depreciation in Bangladesh.
Okay, thank you. Next question for you, Ruchir. Kazakhstan is the big daddy in Central Asia. Yeah, I agree with that on landmass wise, yes, but the population actually is bigger in Uzbekistan and nearly double as so far I know. And I think also economy wise, pretty soon Uzbekistan will take over Kazakhstan, but that's another discussion. But the question then is, do you invest in this market, Ruchir?
Yes, we are. In fact, it's one of our larger holdings for the fund. We hold about 10% of allocations in Kazakhstan. And in fact, two Kazakh companies are within the top 10 positions for the AFC Asia Frontier Fund. One is Kaspi, which is the fintech company, which does super app and digital payments and digital lending and e-commerce. That's in fact a second business. It is a second biggest stock position for the fund. About 4.5% of the fund weighting is in Kaspi. And the other Kazakh company we hold, which is in the top 10, is Halyk Bank, which is the largest bank by assets in Kazakhstan. And we also have one more position in Kazakhstan, which is Kazatomprom, which is the uranium producer, the world's largest uranium producer. That's not on the top 10, but we also hold it. So yeah, we hold these three large companies. They're all blue chips, large companies, and it is a very important part of our portfolio.
Okay, Ruchir, that just another question came. Are there markets in which you see domestic investors, including retail investors, becoming a real driver?
Yes, absolutely. I think across our markets, you're seeing the importance of domestic investors. In fact, of course, Vietnam is a living example of the importance of domestic investors, which has already happened. But I see the domestic investors getting more and more important in countries like Pakistan and Bangladesh because that market has not been tapped from a retail investor perspective. As I was mentioning, they're only about less than 300 or less than, I think, 300,000 brokerage accounts by individuals in Pakistan. So a lot of room to grow over there. So that could be a big driver for the stock market in Pakistan. Also Bangladesh, I think a lot of room for domestic retail investors to come back in the market because these two have been in these two countries, domestic investors drive the markets. I would say these two countries stand out from not just driving the market, but also in terms of capital market development and companies which are in the capital markets. A lot of room for companies to grow in this sector.
Okay, great. Thank you, Ruchir. Okay, now questions for Scott. There were quite a lot of questions regarding Uzbekistan. I'm actually not surprised about that. Hello, Scott. I understand that in an inefficient market like Uzbekistan, being totally transparent can be somewhat tricky. However, would you be able to shed some light on the current holdings of your fund, AUM, and performance, please? Many thanks.
Sure. So the fund's up about 35% since inception. It's roughly a $14 million fund. And in terms of holdings, we basically, well, two parts. One is that we want to position to equities that when a local or foreigner opens an account and says, I want to invest in the market, what are the best companies? What are the biggest companies? What are the most liquid companies that have the best leverage to economic growth? That's what we concentrated our holdings around. So it's financial services, banks, the commodity exchange, and then materials, things that are going towards the construction of the country and also being exported regionally. So cement, steel, and then a bit of consumer goods.
Okay, thank you. All right, then some more questions. That's an interesting question here. Does custody in Uzbekistan help your fund specifically, or it doesn't affect you operationally given that you're already set up and trading?
It doesn't affect us. A lot of basically right now the custodian is the government, which is fine with us. It used to be the same in Mongolia about a decade ago. Thomas, correct me if I'm wrong. And then they switched to allow the local banks to offer custody. But you have a lot of funds that are much bigger than us and less nimble, and they want to have a third-party custodian that's not the government. So for us, it doesn't affect us at all. And everything's in our name. It's segregated, unlike actually in a lot of Western, more developed economies. The share certificate, if you will, that's held with the custodian, with the government, says, XYZ shares are owned by Asia Frontier Capital Uzbekistan Fund. So there's no issue with custody in that regard.
Yeah, I mean, for us, it doesn't change where we'll maintain our current setup. But what will obviously change is that now, hopefully, sooner or later, other funds which need to have a custody, or especially, let's say, UCITS funds in Europe, that they will be able to invest finally in Uzbekistan, because right now they cannot. And hopefully they will start investing and drive up the prices. And that's what we are really betting on. So on another question, there were various questions about the performance. So this question is for Scott. Why did the Uzbekistan market not perform well like other emerging markets did in 2021? When will we see the recovery in the Uzbek market? It feels like valuations keep going lower, which is, yes, we see that. Yes, it's ridiculously, some of the stocks are ridiculously low in my humble view, but please, Scott.
Yeah, part of it is because there's a lack of plumbing. You look at, so for example, I've met a few dozen foreign investment managers that have come to the country and said, we're interested, our minimum ticket's $2 to $5 million. What can we invest in? The answer for the time being is very little. And that's two to $5 million per position. So you have that, you have custody, and again, the piping that's being built out by the current CEO of the stock exchange should help to facilitate a change in that regard and attract more foreign capital. The boom that we saw in 2020 and 2021 was the result of really local capital and a bit of Kazakh money. Probably, I like to say less than 10 million friends on the ground that are locals that are involved in the market. Like to say it was probably 3 to 5 million that pushed the market up exceptionally strong in those years. So it's not going to take a lot of capital to move the market. The problem is that you have a lot of foreign investors that may be small funds. Otherwise, they're foreign, just retail investors that are putting $50,000, $100,000 to work. The key question is what needs to be done to get foreign investors, foreign institutional investors into the market. And the key is the plumbing that I've been talking about for the past 2 odd years. That should be what causes a step change to occur in the market, because it's not going to take a lot of money to happen. And also, again, you look at the macro situation, the macro is beautiful. And also the location, I mean, they just became a partnership member of BRICS. And then also, again, you look at the whole region, it's Russia, China, the Middle East is fighting for influence there along with America. Where's the money going to come from? It's not really going to be Western money that's fighting for real FDI in the country, but in the capital markets, there's no reason it can't be. So it's just, I believe it's a plumbing issue. The story is very obvious. The companies are quite good. They're very cheap. A lot of them are growing very quickly. But the patience has been exceptionally annoying, to be blunt.
Yes, okay, thank you. Now, a little bit for Ahmed, some work. Hello, Ahmed. What would you say is Iraq's competitive advantage, economically speaking, and what industries are particularly interesting?
Thank you for that. That's actually a very interesting question. However, to answer it sort of in a roundabout way, the conflict that the country has suffered from the last 4.5 decades pretty much meant that a lot of our industries, a lot of our businesses were completely sort of put on hold or destroyed one way or the other. However, having said that, this is, if you look at the country, one of the things that we lack as a country is lack of a viable banking sector, which is why we're very excited about the stories unfolding in the bank. Because once we move from a cash-dominated economy, which we began doing that 2.5 years ago, 3.5 years ago, well, 3 years ago, 2.5 years ago, in a serious way, that is really when an industry can happen. Once we have a viable banking sector, once the banking sector is being used, it provides loans and what have you, and grow the economy meaningfully. So what competitive advantage do we as a country have, in a sense? I mean, if you look at it, we have a very large workforce. We have a large educated workforce, that's one. We have a very large domestic market, which will absorb a lot of our industries, which we used to be fairly competitive in a lot of light industries. So population of 45 million, that adds quite a viable domestic market. And finally, it's a market that is high on liquidity, given the fact that we have oil prices. To give you a sense of what is, in a sense of how what is the opportunity that we see for Iraq, and also again in a roundabout way. You look at one of our favorite holdings is a Pepsi bottler company called Baghdad Soft Drinks. It's got a market cap of roughly about $0.6 billion and a PE of 5.5. Now comparisons again, but not really, just to give an idea of how different it is. Varun Beverages, which is a Pepsi bottler in India, has got a market cap of 22.8 billion and a PE of 74. Obviously, very different market, vastly different populations, vastly different stories, but it shows you how far we are. I mean, that's one company where it can benefit enormously from the domestic advantage that we have, in a sense. So I hope I answered that one.
Yeah, good answer. Just another question. Given, as you say, Iraq is always seen as in crisis, and given Israel's very cautiously did not take any actions against Iran's oil producers, how important do you consider the risk to the oil market?
Oh, gosh. Yeah, I mean, the thing is, by the way, just to make something clear, at least I think of, when I say Iraq is always thought of in crisis, it's in fact, it's mostly in the Western media sense, a state of Iraq. So every time, I've been sort of living the last 5 years, you get many reports, conflict here, Iraq is in crisis, while sort of, those of us who are living in Baghdad hardly are aware of these crises. However, the question is very, very serious in the sense that oil is the lifeblood of the country. Now, having said that, in a sense, it's very promising that Israel withheld from attacking Iranian oil prices, oil infrastructure, which is quite important, and tells you, by the way, that the world, the US and other countries, whether they are Europe or India or China, they've all made it very clear that affecting oil prices is a no-no area for the country, which is, I'm glad that in spite of the risks that are involved there, the two participants have held back, Israel held back. However, in the worst case scenario, really the absolute worst case scenario, as you can imagine, if a conflict takes place and if it hits Iran's oil infrastructure, it might very well end up by closing the Strait of Hormuz, which means pretty much almost most of the oil of the region would be withheld. However, I can't see that taking place as of yet. It's very difficult to price the worst case scenario. All markets, currently right now are looking in a place whereby we have overcapacity, at least in the short term, far more supply than demand. So I would say it's not there yet, and I can't see it taking place.
Okay, thank you. Now, Vicente, over to you.
Yes.
Which sectors are driving the GDP growth in Vietnam when the consumer sector is declining? Something what we have seen recently.
Okay, so thank you very much for the question. Actually, if you look at the first line when I present, you can see that the industrial production increased 8.8%. Is quite impressive. And then another thing, we have the FDI disbursement into the countries also grew very stably. So in the first 9 months, is $18 billion, hit the record high of the history, and it's up nearly 9%. Another thing is export, particular exports increased 15% in the first 9 months, and the revenue in the first 9 months also hit the record high of the history with $300 billion. Another thing you can see, I do not mention in this report, is the tourism. So in the first 9 months, the total international tourists coming to Vietnam is 12.7 million tourists. So it surpassed the 2019 level already, and it's up 43% compared to last year, and it's bring probably more than $13 billion to the country. 3%, yeah, roughly 3% US dollar, 3% GDP. And so actually, but consumption is not declining, it's up. So if you look at the retail revenue, is up 8.8%. So actually but it slowed down a little bit, but it doesn't decline. And regarding to the political outlook, as I said, that after the general secretary and the new president already selected, so right now the political already settled, very stable, and I strongly believe that we will have at least 6 years more stable, at least 6 stable coming year. So the outlook about the economy is right now they look forward together in one direction, and they will push together to the reason why they are very confident to set the year target in 2025 at 7 to 7.5%. That's amazing level.
Okay, thank you. You saw the second question already in the box, so you answered it already. So there's another question. Will AFC consider launching more single country funds? Pakistan, Sri Lanka, and Mongolia. Yes, we would love. We'd love to launch additional funds. I mean, what AFC's on my views is that we only launch funds when we also are convinced that investors will make money. So we also try to time, and especially for Pakistan and Sri Lanka, it's a good time to invest, to start investing. But what we need is investors. So we cannot just launch a fund. We also need to have the seed money to start the fund. So, and unfortunately, I mean, we have the last couple of days when we announced, when we wrote in newsletter that I'm going to Pakistan, some people have contacted me. How about the Pakistan fund? Yeah, let me know if you're interested, and yeah, we can think about it. But it's unfortunately, everything is getting more difficult. When we launched the Vietnam fund 10 years ago, it took us about 3 months to launch a fund from the idea until we launched the fund. I think that has now doubled, so it takes about 6 months, unfortunately, with all the paperwork, and everything is getting more complicated. And then there was another question: what is your outlook for Mongolia? Mongolia did very well this year. It's up 19%, has recovered a lot since the crisis in 2018 or 19. It's still quite a significant position in our Asia Frontier Fund, despite it's a very small country, only population-wise and GDP-wise, only 3 million people, but it's a landmass-wise a huge country. And the outlook is, I mean, right now, I mean, with commodity prices going up, coal prices are relatively stable, iron ore, copper prices also the outlook pretty good. Mongolia has also gold, a lot of gold, so gold prices at the all-time high trading. So that is basically very good. But what we don't need to forget, or should not forget, is that Mongolia is a big country, but it only has 2 neighbors, and one is Russia and one is China. So if China, it depends on the elections next week. If China gets the GDP growth slows down, I'm not sure if the coal exports will continue like that. So it might slow down. So basically positive, because the country has a lot of natural resources. It's our shareholder of Asia Frontier Capital, Mark Faber, once said Mongolia is the Saudi Arabia of Asia, which is not really correct. Saudi Arabia is also in Asia, but still It's a different meaning, but yeah, I really support that it's very natural resources rich. So it could be potentially a very interesting country and the outlook for investment. Then another question for Vicente. Does he notice any impact of the anti-corruption drive in Vietnam, which has now been going on for quite some time?
You know, normally I rarely discuss much about the political, but actually anti-corruption campaigns really impacted Vietnam economy in the last 4 years. But however, after the general secretary was elected and the new president also was elected, as I said, on internal conflict and fight inside the political was solved. I'm not sure 100%, but I think it's already done. So I do not see that the anti-corruption is an obstacle for the economic growth any longer. Right now, they seem look forward one direction to push the economy up. This is what I feel. This is the reason why you can see that they set a very high year target in 2025 when they together look forward in one direction.
Okay, great. This concludes our webinar today. And since we still had some unanswered questions, we will answer them directly by email. And if you have further questions, you can always reach us by email. I hope you enjoyed this webinar. We will continue to hold quarterly webinars in the future, and we will announce them in our upcoming monthly newsletters. And since this was the last AFC webinar of this year, I would like, on behalf of the entire AFC team, wish you already a peaceful and happy holiday season and all the best for a prosperous 2025. Good night from Asia and enjoy the rest of the day. Bye-bye.